Hello there, welcome to Global Business Today. I am Yemisi Lanre Ido. Well, we'll kick off this Global Business from Kenya now, where the country is seeing a budget assumption plan, or a budget assumption plan is already underway, and it's seeing a budget deficit of 3.8% of GDP in the 2025-2026 July-June financial year. And according to the director of the Macro and Fiscal Affairs at the Ministry of Finance, Musa Katanji, the government will set a borrowing ceiling of 759 billion shillings. That's about $5.88 billion in the next financial year. The fiscal target will be lower than the 4.3% of GDP in the financial year, and the government was forced to raise the budget deficit for this year after deadly protests that forced President William Ruto to abandon proposed tax hikes. The East African nation has been struggling to fund its budget in recent years due to rising annual debt service costs and flagging growth in the government revenues. Well, just as Kenya is planning its budget assumption, Nigeria is waiting for its approval for its budget assumption. But another thing it is doing is that it has announced plans to rebase the country's consumer price index and gross domestic product by 2025. And that's aimed at enhancing policy accuracy and boosting investor confidence. Well, this move is expected to strengthen the country's economic management systems, as well as solidify its position as a leading economic force in Africa. Well, earlier on our breakfast show this morning, Dr. Vincent Owani, former Director of Research and Advocacy, Lagos Chamber of Commerce and Industry, as well as the head strategist at Safric Investment in West Africa, made a significant speech about the economic shift and its implications.
In 2014, we rebased our economy, and we saw that our GDP became the highest in Africa. Then $590 billion US, that was our GDP size. And some of us were very happy about it. But we warned that being the largest economy in Africa, without doing it organically, was really dangerous. And we've seen where we are now. April 2014, our GDP number, $590 billion US. Today, it's about 252. So during this period, we've over 50% cut in our GDP number. So it's not about rebasing now. It's not about rebasing. For me, I don't think the rebasing is the issue. The issue is to solve the problem that makes our economy not work, to solve those problems that is making companies that are 100 years old, 50 years old, operating in Nigeria, packing their loads, going to other countries. That's the problem we need to solve, and we know those problems. So it is time to move from the cosmetics, to actual surgery. And remember that this current administration have said that by 2030, their target is to have GDP size of 1 trillion. And I think it would be wrong for us to achieve that target through a mathematical bookwork behind the envelope calculation. Now, you will talk about sectors that will benefit or sectors that will not benefit. I don't think there is any sector that will benefit from this. The only thing is that one sector will just be thrown up and say, hey, we recognize this sector. For instance, the last GDP rebasing in 2014 threw up ICT. I don't know what they are going to throw out now. And good enough, we saw ICT doing well. ICT contribution to GDP grew from 4%, 8% to 18%. It has moderated. The rate of growth at some point was 34%. It has also moderated. The GDP numbers released, I think, Q1 2024 is saying that sector is not doing well. It's still growing, but it is growing at a decreasing rate. So we don't know the sector that they want to throw out now.
No.
But me, as an economist, as an analyst, I've looked around. I've not seen any sector that is going to be the showman or the poster boy at this time. I don't see that sector. What we need is a type of sectoral reform that will unlock either a dormant sector or a sector that is not existing at all. Like we saw when this ICT we just celebrated was unlocked by reform. The 2000 reform that brought in foreign investors to invest in telecoms, and how that telecom helped us in different media, it helped us in finance and everything. There are sectors that we need to unlock. Whether we like it or not, solid minerals have not been unlocked. That is why we are seeing illegalities and terrorism flourishing at that point, in that sector.
Well, from there, we head over to Nigeria's neighbor, Ghana, which is working to ensure that its currency, the cedi, is not threatened any further. And that's as it clamps down on private pension fund managers who want to invest in offshore assets. Assets under management by the pension fund industry were 78.2 billion Ghanaian cedis. That's about $4.93 billion in June, of which over 73% were managed by 39 private fund management firms. After pension reforms in 2010, workers' retirement contributions in the world's #2 cocoa producer enjoyed strong growth, buoyed by a tiered scheme that allows private firms to manage some contributions, while the majority of contributions are invested in Ghanaian assets, including Ghana government Eurobonds. However, private fund managers have been eager to explore offshore investment opportunities following the restructuring of 31 billion cedis of their holdings under a local debt rework. Well, the stage looks set now for another interest rate cut by South Africa's central bank this week. Well, this is because the country's annual inflation rate slowed sharply to 2.8% in October. Statistics South Africa said falling fuel prices were the primary driver of the slowdown in the headline rate from 3.8% in September. October's readings is the lowest inflation and has been since June 2020 during the peak of the COVID-19 pandemic. South Africa's government-regulated petrol and diesel prices fell by more than R1 a litre in October. The South African Reserve Bank, SARB, will announce its next interest rate decision on Thursday. Well, that's a good development coming from South Africa, with the drop in fuel prices now affecting the rate cut. Well, it's a good one. Hopefully, other countries can take a cue from that. All right, now, as the G20 summit in Rio de Janeiro concludes, South African President Cyril Ramaphosa set to host the next summit in 2025, says it wants to include all voices, all views, and all structures. Ramaphosa adds that the goal is to make the 2025 summit in Africa-focused G20. Ramaphosa also praises Brazil's President Lula for the unprecedented G20 Social Summit initiative, which includes civil society in talks among world leaders and pledges to continue it.
Our approach to the G20 summit is underpinned by inclusivity. We want to include all voices, all views, and all structures as much as we possibly can, and formations. Africa is our home, and we are going to seek to make this G20 an Africa-focused G20. So we welcomed this innovation and said that we want to continue with this new practice that Brazil has started. And we think negotiation is the only way out to resolve this conflict.
Well, British Prime Minister Keir Starmer and Brazil's Finance Minister Fernando Haddad on their part signed an agreement to launch the Global Clean Power Alliance. The initiative, aimed at unlocking large-scale investment in clean energy, brings together leaders from several countries, including Norway's Prime Minister Jonas Gahr Store and Tanzania's President Samia Suluhu Hassan. Well, this will ensure that no developing nation is left behind in the transition towards sustainable energy solutions.
So I'm pleased to launch the Global Clean Power Alliance, alongside Brazil, our partner in launching this first mission. This is about harnessing the political leadership needed to unlock investment on a huge scale, so that no developing country is left behind. Because emissions anywhere matter for climate change everywhere. And while clean energy investment is growing in the UK and in some others, it's flatlining in emerging and developing countries, despite being home to 2/3 of the world's population. These countries receive just 15% of global clean energy investments in recent years. So the finance mission will bring us together to change that. I want to congratulate President Lula for his leadership on climate finance through the G20 and looking ahead to Brazil's COP presidency next year. We will work closely with Brazil and all of our partners to deliver real progress.
You're watching Global Business Today. World's biggest and best-known cryptocurrency, Bitcoin, hit a record high above $94,000. We have more on that exciting news for you in a moment. Please stay with us. Glad to have you back. Well, let's still stay in Britain now, where British farmers gather near Downing Street and the Houses of Parliament for protest against controversial government plans to change inheritance tax rules for land ownership. Well, this, the claim, threatens to break up the sector and hit food production. Angry at inheritance taxation changes outlined in last month's budget by the Chancellor of the Esquire, Rachel Reeves, protesters carried placards reading "No farmers, no food," while a procession of tractors drove past central London. While the immediate catalyst for the demonstration was a tax change, it also reflected a broader sense of grievance among some of those who live in the countryside, who accused successive governments of betraying their interest, particularly in the wake of Britain's withdrawal from the European Union. Well, Finland's National Bureau of Investigation says it has launched an investigation into a severed undersea telecoms cable connecting Finland and Germany, considered sabotage by Berlin. The submarine cable connecting Helsinki and the German port of Rostock was cut south of Åland Island in Swedish waters. That's about 700 kilometers. That's 435 miles from Helsinki. Within 48 hours, another telecommunications cable was cut in the Baltic Sea, linking Lithuania to Sweden, prompting European officials to say that they suspect sabotage and hybrid warfare linked to Russia's invasion of Ukraine.
So today we got the request from the senior company, and we have started to collect the facts from the incident from our national authorities and from our international partners. And maybe during tomorrow we will decide what will be the crime or offense we are suspecting. It might be also that there is no crime happened, it might be an accident, but it's also responsible for the police to investigate these kind of incidents. And if there is an external actor by boat or by ferry, it might be the same boat or same ferry which has caused these incidents, but these are the facts that we are currently collecting from our international police partners. First of all, it would be really good to go there, do some technical investigation on the seabed to find out what really has happened, and then we collect the information and trying to build up the picture, what has happened, timeline and so on.
As we heard actually today, the impact for the whole nation or the internet availability or so, it doesn't seem to be very big, or it is even relatively small. So it shows that the redundancy of the Finnish network is good enough to tolerate such one cable failure. We are loading actually the ship at the moment in Calais in France, and it is supposed to start the journey to the incident site in 2 days on Thursday morning, and then it should be arriving to the incident site at about Sunday noon, Monday morning.
2 cables has been broken, and one is between Finland and Germany, and this is of course our focus, but we also have been in touch with our colleagues in Lithuania and Germany and Sweden and to understand what has happened in those places as well.
Well, it does look like the competition for robots-led operation in industries is getting stiffer by the day. Well, this comes as China has now overtaken Germany in the use of robots in its industries. An annual report published by the International Federation of Robotics, IFR, showed underscoring the challenges facing Europe's biggest economy from Beijing. In terms of robot density, South Korea is the world leader with 1,012 robots per 10,000 employees, up 5% since 2018. Well, that's an important indicator for international comparisons of the automation of the manufacturing industry. Well, Singapore comes next, followed by China with 470 robots per 10,000 workers, more than double the density it had in 2019. Well, that compares with 429 per 10,000 employees in Germany, which has had an annual growth rate of 5% since 2018. That's interesting. Robots taking the day in industries. Well, we'll keep watching that and see how it spreads. Well, over now to Russia, where gas exports to Europe via Ukraine were stable Wednesday. Well, data from Kremlin-controlled producer Gazprom showed, with nominations for flows to Austria from Slovakia also unchanged. Gazprom halted supply to Austria's OMV on Saturday over a contractual dispute, the Vienna-based company said, while Gazprom has not commented. It is not clear whether gas volumes intended for OMV have been redirected. While Slovak state-owned firm SPP has said it was still receiving gas from Russia and suggested others were buying more because there was still great interest in Russian gas in Europe. Gazprom said it would send 42.4 million cubic meters of gas to Europe via Ukraine on Wednesday, the same volume as of that on Tuesday. Well, now the news that Donald Trump's social media company was in talks to buy crypto trading firm BAT has made Bitcoin rise to a record high above $94,000. Yes, $94,000. This exciting news also added hopes of a cryptocurrency-friendly regime under the incoming administration. Bitcoin, the world's biggest and best-known cryptocurrency, has more than doubled this year alone. It was last at $92,104 in Asian hours on Wednesday, having touched a record high of $94,000.78 just towards the end of the previous session. Cryptocurrencies have soared since the November the 5th U.S. election as traders bet President-elect Trump's promised support for digital assets would lead to a less restrictive regulatory regime. And slowing demand for safety havens seemed to have led to the climb in U.S. dollars from a one-week low on Wednesday, while the Japanese yen slid. The wait by investors for more cues on U.S. President-elect Donald Trump's proposed policies also aided the rise. The previous day's boost to the dollar and other traditional safe haven currencies like the yen proved short-lived after Russia's foreign minister said the country would do everything possible to avoid the onset of nuclear war, hours after Moscow announced it would lower its threshold for a nuclear strike. The Japanese yen dropped to 155.67 against the greenback, retracing the previous day's gains. And concerns about escalating hostilities in the Ukraine war hardly had an effect on crude prices as oil was broadly stable for a second day Wednesday. Brent crude futures for January were up 11 cents to $73.42 a barrel at the early hours of the day. U.S. West Texas Intermediate crude futures for December due to expire Wednesday were flat at $69.39 per barrel, while the more active WTI contract for January was up 18 cents at $69.42 per barrel. On the demand side, U.S. crude oil stocks rose by 4.75 million barrels in the week ended November the 15th. And with that news from oil and how the war in Ukraine is going on, that's how we wrap Global Business today. For now, don't forget you could get more on our social media handles as well as our content hub at www.ln247.news. I am Yemisi Landredo. I'll see you again.